Hello there, this is Larry Pond. Today we're going to talk about electric vehicles. There's been a lot of updates and changes to the rules. So let's talk about what's new for 2023. So first of all, a little bit about me. I'm Larry Pond. I'm a CPA, a PFS, CFP, enrolled agent, United States Tax Court practitioner, and an AUP here in Redwood Shores, California. I really enjoy talking about taxes. And I also teach income tax at the College of San Mateo. So let's get started. Let's talk about electric vehicles. It can be quite confusing. So let's talk about what the new rules are for electric vehicles. So we went through some major changes as a result of the Inflation Reduction Act that was passed in mid-August of 2022. So before the Inflation Reduction Act, we had Internal Revenue Code Section 30D. That's a very important code section to know because you can go to the IRS website and the search box type 30D, they'll take you to the various web pages regarding the tax credits for electric vehicles. So it's basically like four different dates you're going to need to know about electric cars. Did you get it before August 16th of 2022? Did you get it between August 16th of 2022 and 12/31/2022? And then, did you get an electric vehicle between January 1st of 2023 and then April 17th of 2023? So depending on when you purchased the car, the rules are going to be different about what the credits are and how much they're going to be. So before the Inflation Reduction Act, the credit was called the Qualified Plug-in Electric Drive Motor Vehicle Credit. And there's only one credit that was available to individuals and businesses. They all operate in the same set of rules. So you could have a vehicle that's either a personal use or a business use vehicle, subject to those limitations, the amounts that can be claimed as a credit. So if it was a business vehicle, then you can claim it as a general business credit. This is before the Inflation Reduction Act. Well, after the Inflation Reduction Act, we have a new code section. It's 45W, and that's for Qualified Commercial Clean Vehicle Credit. And this is for business use vehicles. The rules are very different from the personal use vehicles. So many new cars are eligible for both credits, and taxpayers have to choose which credit to claim. Now, we did get some guidance from the IRS about these rules. So we have Revenue Procedure 2022-42. It talks about the credits under Section 30D. Those are for personal vehicles. 45W for business vehicles, and 25E. Those are for used electric vehicles. And it's got guidelines for manufacturers and sellers of clean vehicles. Then this year in 2023, we got notice 2023-16, which modifies 2023-1, which we got towards the end of last year. And basically it says the IRS will propose regulations on definitions and what it means to have critical mineral and battery component requirement. What does it mean to meet those requirements? And then we got notice 2023-9, which addresses credits under 45W, the Commercial Clean Vehicle Credit. So speaking of proposed regulations, we did get some proposed regulations this year. It was issued on March 31st of 2023. It's proposed regulations 1.30 capital D-3. They were issued on March 31st, but they were to be published on April 17th, 2023. Why is that date important? Well, all the rules set forth in these proposed regulations are in effect as of April 18th, 2023. So what the proposed regulations give us are the new critical mineral and battery component requirements that will apply to vehicles placed in service after that date, after April 17th, 2023. So for vehicles placed in service before April 18th of 2023, the clean vehicle credit is calculated as a $2,500 base amount plus $417 for vehicles with at least a 7 kilowatt hour battery, plus the additional $427 for every kilowatt hour over 5 kilowatts, up to $5,000 over the $2,500 base amount. That's $5,000 plus $2,500 gives us the $7,500 maximum credit. The minimum credit after 2022 and before April 18th of 2023 is $3,751. The critical mineral and battery component requirements do not apply to vehicles placed in service before April 18th, 2023. So vehicles placed in service after April 17th, 2023, these new critical mineral and battery component requirements will apply. So what does it mean to be placed in service? A vehicle is placed in service when vehicle is placed in service when the taxpayer takes delivery of it. So for example, you can order your car before April 18th of 2023, but it's not delivered until after April 17th. Then it must meet these critical mineral and battery component requirements. So, there's not a whole lot we could have done in terms of scrambling because of availability, supply issues. If you're lucky enough to go to a dealer's lot and say, hey, I want that car, you got it that day, I guess that's good. But for most vehicles, even though you might order it today, it might be a while before you get it. So let's take a look at Section 30 Cap D, the Clean Vehicle Credit. So that's for electric vehicles. So the Clean Vehicle Credit is up to $7,500 for new clean vehicles placed in service by the taxpayer during the tax year before January 1st of 2033. So taxpayers must meet the following conditions. Taxpayers must commence original use of the clean vehicle. The taxpayer cannot acquire the clean vehicle for resale. A qualified manufacturer must make the clean vehicle. Final assembly of the clean vehicle must occur in North America. So I've been getting questions from all kinds of people, some great business ideas. They say, I'm going to just keep buying up these cars and getting thousands and thousands of dollars of tax credits. I said, what are you going to do with the cars? I'm going to sell them. No. If you're reselling them, maybe if you have one car, that's probably okay. But the question is if you're in the business of reselling cars, you're not going to qualify for this credit. And then the Inflation Reduction Act included or added several limitations. The critical material and battery component sourcing requirements, MSRP limitations, and taxpayer modified AGI limitations. So let's talk about the battery and the minerals. So the $7,500 credit is broken into two parts. So the first part is up to $3,750 of the credit is for the critical minerals. So the credit values depend on meeting the requirements for the percentage of critical minerals that were either extracted or processed in the U.S. or in any country with which the U.S. has a free trade agreement in effect or recycled in North America. Currently, the applicable percentage is 40% for vehicles placed in service before 2024. And then subsequent to that, the percentage keeps increasing over time. And of course, we're hearing all kinds of pushback from the manufacturer saying, we can't meet this timeline, so we'll see what happens. The second part is up to $3,750 are for battery components. So the credit values dependent on meeting the requirements for the applicable percentage of the value of the battery components that are manufactured or assembled in North America. The applicable percentage is 50% for clean vehicles placed in service before 2024, and the percentage increases over time. Again, we're hearing all kinds of pushback from the manufacturers. And then there's price caps on the retail price of the vehicle. It's $80,000 for vans, SUVs, and pickup trucks. It's $55,000 for sedans and other vehicles. So you got the price caps on the vehicle, and also you have the modified AGI limitations. $300,000 for married filing jointly, $225,000 for head of household, $150,000 for all other filers. Now, the AGI limitation applies to the current year and the prior year. So if you already met the AGI limitations in the prior year, nothing you need to do in the current year. However, if you don't meet in the prior year, there could be some planning you can do in the current year to meet the AGI limitation. So there's AGI limitations now. All right, let's talk about new Code Section 45W. This is for commercial clean vehicles. So what hasn't changed is under the old law, 30D-C, the business use of qualifying vehicles was unchanged. The Inflation Reduction Act didn't change the rules for commercial clean vehicles. So taxpayers who purchase qualifying cars for the business can still claim the clean vehicle credit. So many cars qualify for both the clean vehicle credit under 30D and the new qualified commercial clean vehicle credit under 45W. But you can't claim both credits for the same vehicle. So starting in 2023, the maximum qualified commercial clean vehicle credit for vehicles with a gross vehicle weight rating of less than 14,000 pounds is $7,500. Now that's claimed as the part of the general business credit under Section 38. Now the clean vehicle credit under 30D is only available to vehicles with a gross vehicle weight rating of less than 14,000 pounds, and the maximum credit is $7,500. That's for 30D. Now, if there's a combination of business and personal use, we have a lot of that, right? A lot of clients are like that. So you split between personal and business use percentages. That's based on mileage, total mileage and business mileage and personal mileage. So the business uses report on Form 8936 Part 2, the business portion of credit is treated as part of the general business credit, which gets carried to Form 3800, which is the general business credit form. The personal use of the vehicle is reported on Form 8936 Part 3, and that carries to Schedule 3 of Form 1040. Schedule 3 is the credits form. Now, the proposed regulations that we talked about also create a 50% business use threshold to split the clean vehicle credit. So if the business vehicle or the vehicle is more than 50% business, then the entire credit is claimed as a general business credit under Section 38, not 30 Cap D. However, if the business usage is less than 50% business, then the credit is apportioned between business and personal use. Now, the unused business credits, you fall into a limit for whatever reason, it could be carried forward. Now, the personal portion is not refundable and it cannot be carried forward. So this is where some tax planning comes into play. And I've run into this in previous years with some clients that they had a low tax bracket that year and they bought an electric car and they got a $7,500 credit, but their tax liability was zero. So their car dealer said, oh, you're going to get a $7,500 refund. That's untrue. Never get your tax advice from a car salesperson. However, so unfortunately, she couldn't use it. However, if we met her earlier, before the year is out, told us that she bought an electric car, got a $7,500 credit. She was an older person, which means she was older, age 70. I would have told her to let's do some Roth conversions. Convert some money out of your IRA, generate $7,500 of tax liability, do some math, figure out what's going to get us to a $7,500 tax liability, then that can be totally offset by the credit. So tax planning is very important. It's not at tax time, it's before the end of the year. So if you're going to take advantage of these credits, and if your tax liability is zero for whatever reason, you can't use it. There's no carryover. It's not refundable. When it comes to the AGI limits, it doesn't apply to C corporations. The AGI limits do apply to the partners and shareholders of partnerships and S corporations, and there's a flow through of the Section 30D credit. So you got to look out for that. So unlike Section 30D, The following limitations don't apply. Now, this is only for vehicles of under 14,000 pounds. So no critical material or minerals and battery component sourcing, no MSRP limitations, no AGI limitations. So this is a nice workaround to all those limitations for 30D for personal vehicles. So here's the requirements, or here's the list of qualifying vehicles to be a qualifying vehicle. So number one, the vehicle must be depreciable. It's a business asset. You have to take depreciation on it. Is used in a trade or business, made by manufacturer that enters into a written agreement with the IRS to periodically report VINs, vehicle identification numbers, and other info related to the vehicle. The vehicle cannot be purchased for resale, must be primarily used in the U.S., treated as a motor vehicle for purposes of Title II of the Clean Air Act, manufactured primarily for use on public streets, roads, and highways, not including vehicles, does not include vehicles operated exclusively on a rail or rails. Mobile machinery, and must be propelled to a significant extent by an electric motor with at least a 15 kilowatt hour battery. Now, you could go down to a 7 kilowatt hour battery if the gross vehicle weight rating is under 14,000 pounds. This also includes qualified fuel cell property vehicles. So the credit amount is the lesser of 15% of the vehicle's basis, or 30% for vehicles not powered by gasoline or diesel internal combustion engine, or the vehicle's incremental cost. And incremental cost means the difference between this electric vehicle versus the gas or diesel version of that same vehicle. And one of the revenue procedures I mentioned earlier goes into that into much more detail. The credit's capped at $7,500 for qualifying vehicles with a gross vehicle weight rating of less than 14,000 pounds, up to $40,000 for gross vehicle weight of 14,000 pounds or more. So incremental cost is the excess of its purchase price over the price of a comparable vehicle. Which is a vehicle powered solely by a gasoline or diesel internal combustion engine and comparable in size and use to the vehicle in question. The IRS Notice 2023-9 gives us a safe harbor regarding the incremental cost of certain qualified commercial clean vehicles. There's more details in that IRS notice. And finally, Section 25E, a new code section. This is for previously owned clean vehicles. So before the Inflation Reduction Act, you could buy a used electric car, but there's no tax credit for that. Now there could be. So it's got to be a used clean vehicle. It's only for individuals, not for business. It's got to be at least 2 years old or 2 model years ahead. So we're in 2023. So that would be 21 or older, 2021 or older. And it's purchased from a dealer, not a private sale, but a dealer who's a certified dealer for used electric vehicles. Now the credit limit is less than the new car. It's a lesser of $4,000 or 30% of the sales price. The maximum sales price is $25,000. So you can take a look at what cars are available for $25,000 or less. You can do this more than once. Credit can be used once every 3 years. Now there's lower AGI limitation. It's half of what the new cars are. $150,000 for married filing jointly, $112,500 for head of household, $75,000 for all others. And this is claimed on Form 8936. So the IRS put out some FAQs. So you go to irs.gov, just type in FAQ for the new previously owned and qualified commercial clean vehicles credit. It's pretty comprehensive. There's topics A through G. Topic A, eligibility rules for the clean vehicle credit. Topic B, income and price limitations for the new clean vehicle credit. Topic C, when the new requirements apply to the new clean vehicle credit. Topic D, eligibility rules for previously owned clean vehicle credit. Topic E, income and price limitations for previously owned clean vehicles. And topic F is claiming the previous owned clean vehicles credit. Topic G is the qualified commercial clean vehicles credit. Check these FAQs often because they get updated quite a bit by the IRS because new cars come up, some cars qualify, some cars don't, and there's always questions that come up. We might come up with some more questions over time because you can't think of everything when you write the law. So that's why the IRS puts out these FAQs to give us some guidance. So here's some more resources to look at. Again, I really do like our car salespeople. We have our friendly car salespeople, but I wouldn't rely on them for tax information. So don't rely on them for that because you could get the incorrect answer, and if you rely on it, that could get you into trouble. So a good place to put out, here's some information, is through the Department of Energy, is fueleconomy.gov. It's updated all the time. It's where you get the list of cars. It even tells you specifically what the credits are, because I have no idea if they met the 40% of the mineral requirement or 50% of the battery components. I have no idea, right? And I don't think the car reviewers do either. So, but they've done the work for us. So click on it. There's a lot of different charts there, which I really appreciate because they have one column for cars purchased before August 16th, 2022, cars purchased between August 16th to December 31st, and then cars between January 1st of 2023 to April 17th of 2023, and cars purchased after April 17th, 2023. So when it comes to taxes, when someone says, hey, I got an electric car, that's great. You definitely need the purchase document because we need to report the VIN number, the vehicle identification number, but we also need to know when the car was delivered. So we know which category it fits in. So we know what the credit amount is. Could be zero, could be 7,500, or something in between. Now, the Department of Transportation puts out the VIN decoder. You click on that. You input the VIN number that you find in your car and the model year. It tells you where it was manufactured. Is it North America? Is it somewhere else? It's very confusing. Just because the nameplate could be a foreign nameplate, but it could have been assembled here. I've driven by the very large factory in Greenville, South Carolina, where the BMWs are made. So those are assembled in North America. All right, so there's a link here for the credits for new electric vehicles purchased in 2022 or before. So that kind of supplements the FAQs here. And then, there's a list of manufacturers and models for qualified used clean vehicles. So you can take a look at that, take a look at which Honda models or Toyota models or General Motors models would qualify. It's there on the website. These are constantly being updated and being changed. So stay tuned on that. So thank you for your time today. Good luck on buying a new car and getting a good price for it. Now remember, don't buy a car just because you get a tax credit. A lot of people do that. They buy a car just to get a tax credit. Try to get the best deal you can on the vehicle. The tax credit, I think, is just a nice extra. Also, depending on where you're located, your state might have some incentives, and there could be some local incentives too. So be aware of that. Take a look at it, take advantage of those. So thank you for your time today. I really enjoyed doing this. If you've got any questions, let me know. If you have other topics you'd like to hear, let me know, and I'll look forward to seeing you again. Thank you, and have a great day. Bye-bye.